I'm going to talk to you about fourth stage bases. We're going to go over basic technical analysis and how important this chart is. You're going to want to print it up, put it above your trading desk so you always remember it and you execute correctly when you find this chart pattern. And then we're going to look at bottoming wedges. Those are the chart patterns you want to be buying. And of course, we'll go over the list of top shelf names on our whiteboard that have that bottoming wedge setup. So when the next window opens, we could put capital to work. I wanted to go over NVIDIA with you and just complete this discussion that we've been having for the last few weeks. I suggest you take a screenshot of NVIDIA, print it out, put it above your desk. We talked about this over the last couple of weeks. Stage 4 bases usually fail. So this is Technical Analysis 101. This will help you improve your investing process if you simply try to focus your investments on stage 1 and 2 bases. It's never been more clear than the NVIDIA chart. The stage 1 base is where you want to begin taking your positions on momentum growth stocks. You can put positions on stage 2. Those work really well. Stage 3 gets more dicey. But as you can see here, you could still make money on stage 3. Stage 4 bases generally fail. They're much more dangerous. And that's what's happening right now in NVIDIA. So it undercuts that low of August 13th. It undercuts the 50-day moving average. Those stage bases are done now. And NVIDIA has to build a whole new stage 1 base and start counting again. This is just basic technical analysis to help you understand where you are in an investing process. And I respectfully submit that you want to try to focus your attention on those stage 1 and 2 bases. And if you've made money on 1 and 2, maybe you go after stage 3. But by the time you get to stage 4, you got to be real defensive with capital, okay? Let's swing over to this chart right here. I want to go over with you more technical analysis for you. So stage 4 bases are dangerous. You want to avoid them. What you want to try to focus your attention on is the bottoming wedge. So again, technical analysis 101, what has been working for the Armor Invest portfolio? We have focused the Armor Invest portfolio on bottoming wedges that are accompanied by Armor Algo buy triggers set up by news events that flush out the sellers at the end of a long-term down. So we want a new piece of news, an event that flushes out the sellers, sets up the bottoming wedge. Armor Algo buy trigger, put the position in our portfolio. For Armor Invest, we have required that structure come with a dividend. So those are the 4 pieces that we've put together to build our Invest portfolio, which is having just a banger year. Here's an example of it with AT&T and Verizon. And in fact, these were the first 2 names we put into the portfolio as we were building this process. AT&T and Verizon had long-term downtrend. So they've been getting crushed for a long time. That, of course, put the dividend yield up to something above 8%. Then we had the event to flush out the seller, which was the EPA scare, okay? Total bogus story all over Bloomberg and CNBC and the Wall Street Journal and Barron's and anybody, who would shout at you that the EPA is going to ruin these companies because of some type of buried lead and ridiculous, okay? That flushed out the last seller. Oh, and don't forget, they accompanied that, right, with a Chicken Little scream at the top of their lungs that there's too much debt on AT&T's balance sheet, okay? None of that was correct. So you and I have to be the smart. Stop listening to people squawking at you on TV. They're not the smart money, okay? So just forget it. You have to be the smart money. You have to think clearly. There's the bottoming wedge. Step 1, the big downtrend. Step 2, the scare or the new event that bottoms the stock and flushes out the sellers. In this case, it was the scare of EPA, right? Then you break out of the bottoming wedge with the Armor Algo buy trigger. That's the green box. Now you're up 31%. You're long-term now. So you have a 31% gain in principal that's long-term, and you've collected about an 8.8% dividend yield on the way up in AT&T. Verizon's the same story. It's about a 24% return. It's long-term capital gains now with a better than 8% yield, okay? So we want to replicate that pattern. And you don't just have to have a dividend. I mean, I did that for the Armor Invest portfolio because that's what I wanted with that part of my portfolio. But as we put the Armor Special Situation Capital to work, I want the same chart patterns, but it could be growth stocks. So in essence, what I'm saying is we're buying turnaround stories. I don't like to call them value. It's what value doesn't mean anything. These are turnaround stories. Value can be value forever. As the asset keeps going down, it's a value, right? But a turnaround story, something's turning around the investment interest of institutions, okay? And so, here's a couple of examples. You can grab a pen, a piece of paper, and jot some of these down. I'm still doing some work here, but here's another telephone company that interests me, right? This right here, big downtrend, fat yield, okay? One of the largest telephone companies in Canada. Looks like it's making a bottoming wedge. It's broken out. There's the green box, right? I'm looking for it to break back above the 200-day moving average and break the downtrend. But let's talk about, turnaround stories in the growth stock world. My favorite's Illumina. I've been talking about this for a while with you. Stock's gone from 500 to 100, right? One of the reasons was a major legal battles and problems they had. There's the bottoming wedge. They finally spun off Grail. They've gotten rid of their legal issues. They've refocused the business, okay? They're refocusing the business on what works and what got them to the table. This is a stock I have a serious interest in, and there's the bottoming wedge. Here's a couple more ideas. We talked about PayPal last week, right? We look at this. I mean, this has just been dead money for a long time. So you look for it to break that downtrend. And when I'm these two green boxes, either it's going to make a new high, I'm going to be on it, or it's going to come down with the market, test the 200-day and the 50, and I'm going to look to get on it. You're looking for new products, new services, new management, something new that brings institutional money into the company and creates that turnaround, okay? So you're looking for all of those pieces to the puzzle. Of course, Square goes with PayPal. Same exact chart pattern, same type of bottoming wedge. Okay, some of you like SOFI. SOFI is a perfect bottoming wedge. But I stress, these are names on the whiteboard. These aren't names I'm buying right now. So let's wrap up this conversation with an understanding that if this is a double top right here and the market breaks below that white uptrend line and below the 50-day moving average, the black line, we're going to have a bona fide sell-off in price, so that it's not going to be a consolidation in time. It's going to be a breakdown in the market. If the market breaks down, we don't want to add any new investments while that's happening. And B, what we're going to want to do, and I'll go over this with you as we go forward in these morning meetings. I'm going to go over with you as the market's coming down. What's at the top of our whiteboard? You know what's going to be at the top of our whiteboard? Relative strength leaders. So we want to work on our whiteboard. What are our favorite names? Ideally, the market's going to come down pretty aggressively here. Ideally for us, because we got a lot of cash. Comes down aggressively. You're going to have a bunch of names on your whiteboard. Most of them are going to fall off the white because they're going to get trashed with the market. And then there'll be those gems, the proverbial cream of the crop that rises to the top. And we'll know this because the relative strength of the stock will be outperforming the market. So prices are going to come down to everything, but the strongest names, you're going to start to see new highs in relative strength, even though the price hasn't made a new high yet. And that is the best pool, lake, ocean to be fishing in when we're looking to put money back into the market when the risk monitor turns green. What are the names left standing with the highest relative strength? Even though the price is down, that's where we're going to want to go. That's what I'll be sharing with you as we go forward in these morning meetings. We're going to be honing our whiteboard, focusing on those names. When the risk monitor goes green, bang, those names go into the special situation.